All right, everyone, welcome back to the channel. We're going to talk about how you can make your first $10,000. How do you go about doing so, okay? And how can you do that on a month-to-month basis to where you can stay consistent making that type of money every single month, all right? I'm going to talk to you today about three simple things that you really need to focus on in order to allow you to become profitable each and every month making that same amount of money. So kind of just sit back, watch the intro, and we're going to talk about those three things in detail. Okay, so the three things that I'm talking about that is going to allow you to make that $10,000 a month, okay? And that is a decent amount of money, all right? You know, it's probably well more than the needed amount for most people to cover their expenses, plus put some into the bank or put some into an additional trading account that they may be trying to build up an account to where they can start trading their own funds with, right? And I know some of you guys out there probably trade with the prop firms, but I'm still saying this video is about how you can achieve or make a certain amount of money per month, and we're talking $10,000. All right. So number one being strategy. Without it, we don't exist, right? Without it, we cannot trade, right? Because it is the when, you know, the how and the where, or at what time we should be taking a trade, right? When I speak of time, I'm meaning setup base, okay? You know, price coming back to a particular area or zone of interest. Now, I trade supply and demand, all right? So when I show you the strategy, which I'm just going to quickly give a synopsis on, we're going to take a look at it, you know, and give you an example of supply or demand. But you're going to get an understanding that strategy is probably the golden tool that we must have in our pocket that's going to allow us to get into a trade, for one, and make money in the market. Because without one, you know, you're not going to know how or where to trade at, all right? You're just going to be looking at these random candles that have up and down movements all over the charts and not knowing, based upon a certain strategy, you know, how you should be executing your trades or what locations, okay? So, and there are various strategies out there, you know, and not everybody trades supply and demand. Some people may trade support and resistance. Some people may trade, you know, certain trading patterns, whatever the case is. But I'm talking about supply and demand, all right? And if you don't know much about supply and demand, please, guys, learn it, okay? You don't have to learn it from me, but I'm just telling you that I have created tons of videos surrounding supply and demand, and I'm going to throw up right now a video that you can actually go to and watch. Watch the video because it discusses, you know, pretty simple how I trade supply and demand. I'll also put the link down in the description portion of this video that you can click on just as well. But if you truly want to learn supply and demand, please watch that video because it breaks things down as to the strategy I use and what I look for out of the strategy, okay? It's pretty simplistic, all right? And I'm not saying you're going to learn it overnight because you do want to practice, and back test, okay? Number two, leveraging. Leveraging is very important when it comes to trading because we need to know how much money we need or we are looking to trade with, right? And that amount is going to be different, you know, depending on the market and the person, you know, when it comes to how much capital you have to trade with. And we're going to talk about that as well because not everybody is going to want to trade with, you know, the exact same amount of money. When I say that, I mean your thresh of how much money you want to put into the market. When you trade, it's going to be different than somebody else because one person may have more capital, somebody else may have less capital, because it's not a matter of trying to get at the end of the race or who gets at the end of the race the quickest. It's all about steady, you know, wins the race, you know, being able to consistently make profitable trades, all right, at a just a slow pace, okay, to win that race. You know, the saying is, slow and steady wins the race. That's true. You don't have to come out the gate full-fledged and just be running at 100 miles an hour, you know, thinking that you're going to have to outbeat the competition, all right? It's, you know, sometimes those that are wiser and move at a slower pace can outdo even those that, you know, are running at 100 miles an hour, okay? So slow yourself down because you don't need to take 10 trades a day to win the race, okay, is what I'm trying to say. So we're going to talk about leveraging as well. Number three, replication and consistency. That is probably one of the most important parts to this video today is because we need to, as traders, take our time, look for high probability setups, and take the same type setups over and over and over. Supply and demand is easy, and that is 99.9% of the cornerstone of how I trade. So I'm looking for setups replicating within the market, taking the same similar types of trades. Yes, the market does different things, but it's all about the zones, the location, supply and demand. That's all it is. All right. So don't overthink or put too much into the thought process. Okay. So let's go ahead and talk about number one, which is strategy. Now, when we first get started, okay, we always want to take a look at our higher time frames. I'll talk about this. All right. Please do not just trade without knowing what the market overall was trying to accomplish. Okay, when I say that, I mean the overall movement of the market. What is it doing? Is it trending up or down? Okay, if it's ranging, moving sideways, then you may want to kind of sit back and stay out of the market. But if we got a strong moves to the upside, where it's making higher highs and higher lows, like we've been doing so over the last several weeks, then you have a bias. We have a bullish bias or mindset. Okay, and at that point, this is a higher time frame for me. Okay, 60 range. It doesn't matter what chart type you're using or style you're using. Just look at one in reference to, figure out what the trend is, up or down, okay? And then trade within that trend off of the lower time frame, all right? So then we go down to our lower time frame. For me, 12 range. It could be a lower time frame for you, whatever, if you're a time-based trader, tick or volume, whatever that chart is that you trade off of. You don't have to trade range-based charts. I just trade them because they look neater and cleaner to the eye to me. Okay, I'm able to see setups or not say patterns, but setups look or cleaner to me to the eye. Okay, so if you're interested in trading range charts, then that's all you're going to see me trade or use in any of my videos, on all my videos primarily. So, anyways, supply. If you know anything about supply or demand, then you know that it is supply, aggressive selling, demand, aggressive buying. So we're looking at one spectrum or the other. Okay, market's moving up, I'm looking for demand, looking for aggressive areas. Market's moving down, I'm looking for aggressive selling. Those type things. Okay, as simple as that. Please, again, do not overthink things. The strategy is simple as this: determining the higher time frame, trading with the higher time frame on our lower chart. Okay, so the strategy is simply just looking for a price to take out a high. In this case here, break of structure I talk about, moving to the upside. I'm looking for price to come back to an area of demand, aggressive buying to the upside. Okay, it's as simple as that. Once price gets to a zone, then we're looking to take action if price rejects that area. If that's all it is, at that point we're looking to execute and get into a trade. All right, so once we're into that trade, it's just a matter of trying to figure out where to get out at, right? Typically speaking, my area of interest is always going to be an area of liquidity. If you don't know what liquidity is, it's simply an area, a bridged area, if you want to call it that, or an area where we may have, say, in this case here, equal highs, similar highs, that where money is rested. Okay, so price is basically stacking up a block area where money rests at. Okay, and those banks or the big players in the market are going to aim for that area if we get a rejection out of an area of demand, in this case here. All right, so here's a area of liquidity resting right here, small area, and then I talk about gaps or imbalances as well in many videos. Guys, I talk about a lot of the same or similar things in my videos. So and the reason why I do that is because I know a lot of people have to hear things multiple times. Okay, and some people may just need to hear it one time, but I talk about things in replication, I would say, because I want people to be able to grasp it. Sometimes we have to hear it 2 or 3 times before it soaks in, right? So that's what I do in a lot of these videos, because I want to beat it and beat it and beat it and beat it and pound it until people understand. So please understand where I'm coming from, because to me, I have to hear things, or see things a few times before I fully catch on. And it just all depends on what it is. Okay, trading is not something that's going to unfold overnight. So let's say we got into this trade right here. Okay, I'm interested in the zone. I'm just going to let you know this is my area of interest. Okay, and then I'll probably be looking to get out, at least take most of my position off right here, and then looking for maybe a run up. But let's just say, this is scalping. Okay, at its best. All right, now if you're a position or swing style trader, this video here, you can still learn from it, but it's really geared around scalping, because I look to get into a position and take several points out the market. You know, unlike most position or swing style traders, they're looking for like huge runs. Okay, they could be sitting into a trade all day for a few hours, or even possibly for a few weeks. You know, it just depends. I am intraday trading, so I look for scalps, setups that repeat themselves over and over. Okay, all right, and it could be a supply zone or demand zone, vice versa. So I get into the trade right here. All right here. Okay, my stop loss is going to be, say, the back end below the area of demand right there, and my target will be this area right here of liquidity. And you know, taking most of my contracts out right there, and maybe let my last contract run. But I'm getting in at 42. Okay, or not, I say 42, because part of my strategy, my plan is this is actually the demand zone right here. This is going to be my stop right here. So we have roughly about a 5-point stop right here. You know, if so, I'm not saying allow your trade to, if the market comes back against you, to get stopped out at 5 points. I talked about that in a video or two ago about where you can get out at if the market does start to come back against you. Again, we're trading off of a 12 range chart, so it's not the lowest time frame chart. Some people may scale down to even a lower time frame chart. Okay, so you know, if I was really want to zoom in, then maybe I'll scale down to my 4 range chart. But primarily, I trade from my 12 range chart because the fact is you know, when it comes to knowing where my threshold, my stop is going to be at, or my threshold as far as getting out, you know, I probably would put my stop right here on the 12 range. But I recommend in one of the videos prior to is, you know, the midway point of a demand or supply area or zone. Okay, so 40. Okay, so maybe give yourself a 2 or 3 point stop, which is typically, you know, 12 ticks, 16 ticks. You know, 16 ticks is 4 points, 12 ticks is 3 points. Maybe if you want to do 2 points, 8 ticks. Okay, so the halfway point of this centered area of the demand zone. I'm just going to take an arrow line here. I'm going to show you right quick. So I think that was a ray. So let's draw arrow line right here. So if this is our halfway point of our demand zone, then we're going to get out around say 39, say 40. Okay, it's 2 points, or maybe 2.5 points. Okay, so this would be the stop area back here for me. All right, or the halfway point. You know, and the reason why this area right here, because this is the back end of the demand zone. If price comes down and takes this area out and breaks that area, then that tells me that price or the market did not want to follow suit at this demand zone to push it upside or continue to push it to the upside when there was aggressive buying. But now, what I'm looking for as far as the rejection is how I always talk about and say, break of a candle in the opposite direction, last closure of a red candle, break of the following candle, or the next candle green to the upside, taking out the previous candle, and I'm looking to go long. Okay, now my area of interest is going to top out here around 51. So if I get in at 40, let's say right here at 45, then and take out at 51, that's a 6-point run or gain right there. Okay, I'm all about this time in 2023 about taking less positions and looking to take a bigger runner. Okay, I know a lot of individuals that trade similar to the style how I trade on the Discord. You know, watch many of my older videos, and they are or have become very good at this. Really tuned in on the scalping technique of getting in for, you know, 2 points here, 2 points there, and it adds up. Some of you guys will really become great at really fine-tuning scalping from a micro standpoint using the full range chart, and they're doing phenomenal, guys. I mean, but anyways, yeah, we got a lot of great scalpers, or a lot of great traders, I should say, that are part of our Discord community that are doing very well following the same strategy and how I trade. All right, and if you don't believe me, please come over to our Discord and you can ask some of the fellow members there, you know, if they use the same strategy and how well they're trading it, and you know, I'll let them speak for themselves. Okay, but yes, simple strategy here, picking up 5 or 6 points right here, simply at a demand zone. So we're going to show another example right now. All right, here's a supply area. I'm going to show you right quick. Supply zone, aggressive selling. This will be a zone right here. Okay, small little zone. Okay, again, if you're a position or swing style trader, guys, this is just what you may be doing, just on a smaller scale down time frame. Okay, so we get a turn in the direction or path of the market movement wise, and it starts to unfold to the downside. So basically, you know, we get these lower lows and lower highs to the downside. Price starts breaking through some area, you know, structure to the downside, pull back. There's an area of demand sitting arrested right here. Okay, look for the rejection, and we look to take price going short. You know, again, aiming for some area of liquidity below, And you know, we do have say for instance, oops, sorry about that. All right, we have, you know, liquidity resting down here, and this liquidity area resting right below here. So we get the rejection right here. All right, when price taps into the supply zone. Why is this supply? Aggressive selling to the downside, okay, coming out of this area here. This is a break of structure to the downside after price takes out 38 and a quarter, okay? So price taps back into the supply zone. We're looking to take price out or take the market down to 32 and a half. I would probably get into a trade right here at 37 and a half, come down to 32, 32 and a half, pick up 5 points, let it run this area of liquidity right here. Again, this is a supply zone. So let's do this right here. Stop loss is going to be on the back end of this area of supply right here at just say 44 and a half. And then we will target this area right here below at 32 and a quarter. Okay, so if we got in here at 37 and a half, it comes down here to 32 and a half. That's 5 points right there. Okay, so this is a little bit over, as you can see here, primarily a one-to-one here in which the market unfolded right here. So right here would be one-to-one in an instance if price came down to 30. It actually broke below 30 and a half and came down to 27 and a half. Okay, I'll say 28. Okay, so yes, again, I would get in here at 37 and a half, aim for this area to take out most of my contracts, and then market comes down, hits that area, pulls back, and breaks lower. Okay, so I just want to show you some examples of supply and demand. You know, both an example of supply and demand. And if you do this on a daily basis, just looking for high probability setups, then yes, you can build your account up. All right. So, and I recommend, like I said, if you're if you're starting off to trade the micros, do not, and I highly recommend going, you know, trading and just jumping right into the E-minis. If you choose to do so, that's up to you. When I'm talking about full-fledged like the ES or the NQ, try using or trading the micros first. You know, I'm saying this no matter how much capital you have, guys, but it's up to you ultimately and how you want to and what you do with your money. But I'm just telling you that take it slow if you don't know much about trading and you're starting off new, because that way you can slowly build an account up. All right, let's say you have $5,000, you want to turn it into $10,000. Okay, so you know you could do that, and that's a great opportunity. You know, put $5,000 into your account. And just trade the micros. And if you are consistent with that on a daily basis, you will watch that account grow to $10,000 in no time. All right. And then you'll be well on your way of making $10,000 a month consistently. Okay. So those are the examples I just really want to show you there. Now let's talk about the next thing, which is leveraging. Okay. All right. So I want to talk about, you know, the micros, okay, because it's a great opportunity if you are a newbie to really start trading with not at much risk at hand, okay? Meaning that if you have, just say $1,000, okay, and you want to get to that $10,000 mark, all right? So the micros, they trade, well, pretty much $1.25 a tick. Yes, it's not a lot of money, but the margin is $40 a contract. So when you start stepping up to the big leagues, to where, like, say, for instance, the full-on ES is $400 a contract. You have to have at least $400 into your brokerage account per contract to trade. You're not having to leverage as much, leverage and putting on as much risk into the market. So why, as a new trader, would you want to take on the risk if you only, say, have $1,000 you want to trade with, and it's $400 a contract to be able to trade? And yes, you could trade 2 contracts with $1,000, but why would you do so? Because that first trade may blow your whole entire account. All right. So with $1,000, I would recommend going over to the micros. Okay, because think about it. For $40, okay, a contract to trade. All right. With $1,000, you can do so. Okay, and I talk about that 10 times the amount of margin to be able to have to start trading. So $400 into an account will allow you enough capital to start trading the micros, right? All right, and even at $400, okay, $40 per contract, I would not recommend trading more than one contract. So if you put $400 into your account, I would only trade maybe one contract. Now, I'm not here to tell anyone how to trade or how much, or how many contracts, or how much to leverage into the market. So just be smart about how much money you trade with when you are executing trades. Okay, so again, $40 per contract for the micros. You know, I had that 10 for me, that 10 times rule. So if I was trading with or had $400, I would be trading with one contract. You know, $800, maybe 2 contracts. Okay, so for every $400 that I would put in my account, $1,200, 3 contracts. I would be trading or moving up my size. Okay, so with $1,000, yes, it is definitely possible. $1,000, I wouldn't trade no more than 2 contracts on the micros. Okay, all right. So just be smart about that, and you can slowly build an account up. But you have to be first and foremost have that solid strategy and understand how to use it correctly when you're trading, what to look for. All right, that's important. That's why that's number one, the strategy part. Okay, number 2, the leveraging amount. You know, being smart about how much you're going to enter the market with on each trade. If I was again, if you're trading the E-minis, it's totally different ball game. So with the micros, 10 times the margin, $400 a contract. With the ES full-on E-minis, then we're looking at $4,000 a contract. Okay, $8,000. 2 contract. Okay, 10 times the amount. Why? Because the E-minis, the full-on the full-on contract, when it comes to the ES, that means that it's most brokers, they require a $400 per contract margin. So 400 times 10, $4,000, and the golden rule of thumb is 10 times the margin, right, per contract. So $4,000 to trade one contract. That safe nets and protects your account. I know that a lot of people are impatient about, you know, oh, $4,000, I could trade, you know, 5 contracts, 6 contracts, 10 contracts, whatever the case is. But when you start sizing up like that, if you're a new trader and you take bad trades, trust me, you'll blow $4,000 in just a day's time, or even a week's time, depending on how many trades you place. Okay, so it's better to be. Remember how I said, slow and steady wins the race? Smart about it from the beginning and build up slowly to get to that $10,000 amount. Okay? And then the last part of this is about being consistent. If you can consistently do that day in, day out, practice the whole part of replication, you know, with the strategy, the leveraging technique, that account will, like I said, build and compound on a daily. And then you can do the same thing each and every month to consistently stay at $10,000 or more. All right. So if 10,000 is your goal a month, that is easy to do if you just stick by a set of standards or principles, you know, and follow that same plan every single month. All right. You must be able to do so. So replication of, like I said, boom, here, using the same setup. You know, don't deviate from that, okay? All right, yes, it is very appetizing when we see things when the market is really bullish to the upside and it's breaking, you know, just have, say, for instance, a break-in test type setup, and then the market breaks out. I'm not a breakout trader. I always want to see price pull back to a zone. Retracement trades work better, what I found, based on back testing than anything else. I mean, I'm not to say that you won't get lucky on taking a breakout trade and it burst to the upside. Yeah, because you know the market could just want to push higher. You know, orders or the institutions or the banks are really wanting to push the market up. All right. It's a psychological game here, guys, that is being played, and you have to be smart about it and not be caught in the middle of it when those dominoes fold the other way. Market's pushing pushing to the upside. You may want that one day, you know, when the market's trending like that to the upside, and start taking breakout trades one after the other, and be successful. And then the next day, because you didn't follow your trading plan, the dominoes fall in the opposite direction or move and to flush you out, and then the market just flushes to the downside, and you're thinking, well, I thought it was still bullish, and now the market's trapped you or stopped you out. And because you leveraged high that day, meaning putting more money into the per trade than your trading plan consists of, then you blow that account. Okay, why build up a week's worth of profits following your trading plan the correct way just to watch them unfold or watch things unfold, and then come day 5 or on Friday, you think you're going to go into the weekend and have a wonderful weekend, you know, and then you lose all that money you made the entire week because you followed your plan, and then now you're going to have a bad weekend because now you have to think about how you can gear back up to make the money you made from the previous week, back up into a new week. Don't put yourself in that situation. Slow and steady always wins the race. Again, okay, so that's all I have for you guys today. I just want to give you some pointers, some tips. If you have a goal in mind as far as how much you are looking to make on a monthly basis, it is very realistic. Just stick to your plan and you'll get there. All right. If you're interested in joining our Discord, the great community where we have fellow like-minded traders that trade in a similar path or similar way, I should say, when it comes to supply and demand, please find the link down in the description portion of this video. There's a link there that says Discord. Click on it, invite yourself in, and come over and ask some questions. All right, feel free to do so. But that's all I have for you guys in today's trading video. Again, if you're interested in how I trade supply and demand, you know, there will be a link down in the description as well to where you can click on that'll give you, you know, basically the rundown and break things down, and as far as to how, what I look for, you know, in trading the strategy that I do. Okay, so I appreciate each and every one of you tuning in today, watching today's video. I'll see those who are part of the Discord community starting tomorrow, you know, because we go on there in that channel or server, and which is the trading floor. So if you want to come over and engage in the trading activity on a daily, there's a channel titled Trading Floor on the Discord server, and that's where we share our trades each and every day. Okay, and that just allows individuals or traders to see our executed trades. Okay, so that people can grasp, maybe ask questions or gather an understanding on why that trade was taken. All right, but just a way for us to air things out and share with one another. Okay, we have a great community. So that's all I have for you guys today. Please do me a favor. If you love the content and value the information that's in this video, please drop a like on the video, as well as if you're not a sub, please take the time to go ahead and subscribe and to turn your post notifications on by clicking on the bell. Okay, click on that bell, guys. That's important so that you never miss one of the uploads on the channel. Talk to you later. I'm signing out.